On this episode, we talk about the phase transitions, crypto getting ready for a comeback, and Jeff Bezos' rocket. Welcome to Think at Heart. And we're live. Another episode of Think at Heart. I'm Scott Goodfellow. This is Ben Hart.
Hello.
And welcome again to Think at Heart. I said that twice in the intro. What do you think, Ben? I feel rushed tonight. We're late night here. We're late night on the. Normally we film it on a Thursday. Today is a Wednesday. We're late night because we both been running our kids around. Ben's got kids in soccer and hockey. I got kids in soccer and hockey, and it's we got to squeeze it in. And we're building an empire here at Hart Investment Group. So, you know, you got to do what you got to do. Young professionals just changing the world. You know.
You gotta grind. You gotta grind.
You gotta do it. And we're humble about it. Well, Ben's humble. I'm not as humble, let's say. I like to point out my accomplishments. All right. I don't know. I think it's a family trait. You probably know that, Ben. Anyway.
True enough.
We digress. So, it feels like we haven't done one of these in a while. We've been madly doing interviews. You know, we're working on innovating some things here as far as the format, since we've been a little inconsistent with launching some of these things. We've been filming them on the regular.
Sure.
We haven't launching them on the regular. So, because we're making some changes, we're going to innovate here in the next few weeks. So, stay tuned because we have some new things coming. Very exciting.
Mm-hmm. Yep.
So, let's just start off by getting caught up with what's happened in the world in the last, let's say, month. Hey, let's do a rundown. What's happened? Let's think back. We didn't talk about this pre-show, but can you think of anything substantial that's happened in the last month? I know there's a lot. I mean, we also just talked about pre-show about what's going on right now, but what's happened in the last month?
Yeah, I mean, from a market and economic perspective, I think a lot of things have happened. From a world perspective, obviously lots going on with sports happening everywhere. The Olympics starting right now, Tour de France, lots of sports in the last 4 weeks.
Stanley Cup was awarded to Tampa Bay Lightning.
Stanley Cup, yeah.
NBA, I think, finished up last night, didn't it?
Yeah. Did they win?
Did the Bucks win? I think so.
They were. Yeah, they're up 3-2, but yeah, lots. This is.
I think they won last night.
Okay.
Who cares? Nobody likes the NBA anyway. Sorry if you like it, but.
Well, Joy likes the NBA, right?
Oh yeah, she's like the only one. Joy, our new team member.
Yes.
To the Hart Investment Group. What's her official title? Is it associate? Administrative associate? What is it?
Administrative associate, I think. Yeah.
All right, let's go with that. Great ad so far, by the way. Really helping out, getting into the weeds there with us and helping us with some projects. So super excited there.
Yeah, absolutely.
Yeah, lots going on at the Hart Investment Group.
Mm-hmm.
Not as, almost probably more with the Hart Investment Group than it is in the world in general. We're just busy.
Yeah, we are.
Yeah,
we are.
People trying to keep up with us.
I think, I mean, from my perspective, the Tour de France was exciting. Cavendish tied Merckx, but he got beat at the line in Paris, so he didn't get the 35th win. So he's tied. He's got to come back next year if he wants the title.
Yes, I know. I feel like the Tour de France is underrated, but that's from two guys that like cycling, so I guess whatever.
Yeah.
Yeah. But I can also see, it's hard to keep people's attention for 3 weeks straight. And let's be honest, some of those stages, the flat stages, it's hard to watch for, 3, 4, 5 hours when really all the action's right at the last 30 seconds, right?
Yeah, for sure.
Anyway, should we talk about some finance and some
we can.
Economics? And so let's start now. We've been talking for months and months now about the quads. Quad 3, you've been threatening a quad 4 for about a year and a half now. That's not actually true. I'm exaggerating. Also, as I do.
Because we had a quad 4 last year.
Right.
February, March, April.
Okay, so let's be honest then. The last few months, you've been
The
threatening
last
a
few
quad
months.
four.
That's right.
Your wish is, I think, finally going to come true. It looks like we're going into one, doesn't it?
It does, yeah. I mean, it looks like that. And, it's interesting. Obviously, everyone's got their own opinions of what this means. And, a lot of people give Dalio credit for starting these different dynamics, these different buckets. We refer to them as the quads because we follow Hedgeye, and Keith McCullough and Hedgeye kind of talks about these different dynamics. And so the last probably 6 months probably 8 months, we've been in this what's called quad two, which is growth accelerating and inflation accelerating together. And so, in that kind of environment, I mean, everyone's an expert and everyone thinks everything goes up forever. And so in a quad two
My
environment,
favorite kind of environment. Everything goes
yeah,
up.
exactly. So that
It's funny when I
typically,
first got in. Oh, sorry. When I first got into this industry, that's where we're at, and everything was just going up. I'm like, this game's easy. Well, how come everybody's not playing this game,
exactly.
right?
Yeah,
And then I was brought back to reality, and I get it now.
yeah, yeah.
So sorry, continue. I cut you off there. You're talking about
No,
quad
that's
two.
all right. Yeah, quad two. I mean, quad two typically comes after a deep quad four, which is what we saw. So we
Mm-hmm.
had that kind of environment where quad four, which I think we're heading into now, which is growth slowing and inflation slowing together. So when you have those happen for a long enough period of time, markets and the economy tends to bottom out, and then you get into things are easy again type backdrop. But yeah, I mean, I think we had this set up, this scenario. We've been talking about it. It kind of peaked, I believe, in March of this year. And I know we are in July, so it's been a bit of a longer process here. But I think we've dipped into kind of maybe a period of quad one where you get the bond curve steepening, so banks do well in that backdrop, insurance companies do well, but it puts pressure on tech growth companies because interest rates are higher. And so we've had kind of the markets kind of recycled out of that. And now we're heading what I believe into quad three and four. Presently, right now, we're in that kind of quad three setup where inflation's still going up and growth is slowing. Like I think we've seen peak GDP growth in the US and Canada, and probably some of the best numbers we'll ever see in our lifetime and career, because
Mm-hmm.
last year was so horrible at this time.
Mm-hmm. So speaking of the quads, what works well then coming up into quad four? What are
Yeah.
we looking at doing?
Yeah, so nothing that's done well in quad two does well in quad four. So there's
Perfect.
so there's
So
lots to do.
just flip it. Eh? Just sell
Exactly.
everything.
Exactly. Flip it. What does no? So I mean, in quad two, you want inflation, right? So you want energy stocks, you want industrials, consumer discretionary. Like, I mean, we've owned Under Armour, Capri, Tapestry, Foot Locker, these kind of names we've owned. You've wanted to own those. Same energy, you can own, Exxon or XLE or CNQ. Like all these names have done great through here. We've owned other names like corn and those types of industries, and all that is basically needs to get chucked out the window.
Hmm.
So that's what typically does well in what we've come into. So there's tons of work to do if you want to reposition for it. Additionally, bonds don't do well. High quality bonds don't do well in a quad two. So what you want to own though into quad four, which is your question, I think we are in quad three first. So I think it's a two-stepper. But what you want to own typically now is you want to own gold. Gold
Hmm.
typically does well in both backdrops. It does a little bit
Hmm.
better in the quad three, where inflation is still going up and growth is slowing.
Yeah.
And so you definitely want to own gold. You want to own US dollars. You want to own high quality bonds. And they tend to do well as the yield curve goes down. So yields, like what the bonds are paying, go down because the prices are going up. And
Right.
so, yeah.
So do commodities in general, like do you look at it like that? Do commodities in general do well in quad four?
So they don't. Commodities in
Right.
general do well in quad two, where you got that kind of
Right.
growthy setup.
Right.
Gold is more like a currency. So
Mm-hmm.
gold's going to trade more like a currency, and so it's not a commodity.
Mm,
Yeah, I guess it's a commodity from a high level perspective, but it trades more like a currency and trades kind of
right.
more off of what happens to bonds. So, bond
Right.
yields are going down, gold tends to go up.
So did what happened with lumber then? Is that like a signal for we're moving into quad four? Like would you, as an example, right?
Right.
That was
Yeah.
one of the signals
Absolutely.
for
Yeah.
sure.
Yeah. Yeah.
So we should talk about that. I don't know if that's the time or that could have been probably a subject on its own, but that's definitely something that's happened over the last. When did it really start to drop? Was it last week? 2 weeks ago?
So
Something like that?
lumber's,
Lumber, sorry.
yeah, yeah. So lumber's been a few weeks now where it peaked
Yeah,
out. Yeah. Yeah. But it's
yeah,
down almost 70% from its peak.
yeah. So what caused that? It's kind of an interesting topic. I am getting off the quad a little bit here, but
That's okay. Yeah.
we'll get back to it. But
hmm
so what started such a run on lumber? Because I don't had it ever seen anything like that before.
Yeah. So
Lumber
commodities are quite,
specifically.
lumber specifically, I can't think of a time exactly when it moved to this, like the severity of the move. So I
Hmm.
think you had everything working against it, and I think we talked about this on a show probably 6 weeks ago or so, where I said I think these are supply chain issues that are going to get cleared up.
Right.
So they had a combination of a lot of demand with limited supply,
Mm.
and a lot of it had to do with kind of that supply chain. And so the
Okay.
steepness of it, with lumber specifically, was different. But you've seen this in other commodities in the past, where you get a
Hmm.
real big squeeze up. Those commodities tend to trade more kind of on a futures market, so the prices can move quite quickly, and commodities are crazy volatile, some of the most volatile asset classes in the world. So, and volatility to the upside also leads to volatility to the downside, like we saw with crypto. So, the same applied with lumber.
Gotcha.
Yeah.
So, did you want to say any more about quads, or can we kind of get right into the what we kind of like there, as far as that's concerned?
No, I think that's good. I
Or
mean, I
even,
think it's
yeah.
pretty simple there's two inputs, which I think we try to talk about each time, GDP and inflation. That decides where we're going from an economy perspective. And, you can call it four quads or whatever you want, but those two inputs make a difference around what investments perform better.
Right.
Yeah.
So, as an example, right? I mean, you know, what what will you be looking to do in portfolios coming leading up to this? I know this week's been super busy for you, kind of getting ready
Yeah.
for this quad four. What are
Yeah.
some of the? I know I can't say exactly what we've been doing, but what are some of the things that you
Mhm.
like and that you're looking at?
Yeah, so I'd start maybe just a little bit with signals too, where we had a pretty steep sell-off early this week, and so that was kind of a signal that the market's starting to get a little bit tired. So that combined with with growth starting to slow, you have to look because we've had a few of these fits and starts over the last 6 months, and so you've had to
Mm,
decide, are we there yet, or do we wait? And so I've decided that we're there. And so, since I've decided that we're there, it's time to clean house. And so,
mm,
I've been chipping and making adjustments as we've gone over the last 6 months. But this week has been the one where I've decided, okay, some of those names I mentioned, like Under Armour, Capri, Tapestry, Foot Locker, Nordstrom, like all of these companies that we've owned for a period of time, started to look at how do we reallocate this money. And so
Mm-hmm.
as we look to shift from the different economic setups, we start to look at shifting from these types of names. I'd say energy would be in that bucket as well. We'd be shifting to some of the other places with consumer staples tending to do well. So you'd be looking at companies like GlaxoSmithKline, Unilever, Clorox, like these types of businesses, high quality dividend payers, mega cap companies. And then as I look to shift from, maybe you own high yield bonds, you'd be looking to shift some of that into U.S. government bonds. So you'd be looking at either kind of the 7 to 10 year ETF in the U.S., which is IEF, or if you
Mm-hmm.
want even more kind of like protection, you'd be buying like long dated bonds like TLT or
Mm-hmm.
EDV or the ETFs. And so,
Mm-hmm.
the reason you'd be buying these things is because you think that there's significant potential upside. And so you'd be
Right.
shifting, try to stay within the same categories and shifting money to other places.
Right. So would
Yeah.
you be sell? So like throughout the transition, you sell off those the previous stocks, and then do you stick in cash and you wait for the right time to buy, or are you just buying right away?
Yeah, so it's a great question. I mean, it depends is the answer.
Yeah. Yeah.
But in a lot of cases, I think there's easy switches right now. So, if you have cash, and say you're sitting in Canadian dollars, um,
Mm-hmm.
if I'm looking to really not invest it in something right away, maybe I'd be looking at putting some of that money into yen or Swiss francs. And so we might be shifting out of some cash into a different currency
Mm-hmm.
as a parking lot. But if I'm looking at like some of these names that I mentioned, there's a good opportunity to switch to like a Clorox or Unilever because Clorox I think is still down about 10 or 15% year to date. Good high quality business. I look at something that's up 30, 40%, buying something that's down 25%. I get a win from the perspective is I know we're not staying in this for very long. Maybe we get a resurgence and we last a little bit longer in that quad too. But I'm taking something that's made me 40%, something that I know is down 25, but I also know that the economic setup is better for this stock over here. So it's a good time
Mm-hmm.
to make that kind of switch. Um,
Gotcha.
yeah. Yeah, and same in the bond space. Like high yield bonds have done quite well, or bank loans. You
Mm-hmm.
could potentially switch. Bonds are a bit harder, so it doesn't always work out. So sometimes you have to be patient with it. So you may go
Yeah.
from high yield to short-term bonds to longer dated bonds.
Here's a question that I think everybody would be interested to know. So, as an active, we've talked about this in previous segments as well, like
Yeah.
active versus passive investing, and as an active um, investor, do you get nervous in times like this that oh, maybe I'm jumping the gun or it's not the right time?
hmm
Are you afraid of making a mistake?
uh, Not really on this setup. Like not with this
Yeah,
setup. Yeah.
yeah,
I'm it's for me anyways, it's tougher for that switch from the 4 to the 2, but because you go from like this, the switch that I'm making is logical for me. I see this happening, going
hmm
to defense. I know how, like, I don't know exactly how it's going to play out, but I got a better handle on
yeah,
how it's going to play out. And I know how some of
yeah,
these dynamics are going to work. As you kind of transition into the quad 1 or 2, your portfolio risk increases a couple of 2 or 3 times. So that switch is a bit more challenging. And, we've come off a backdrop where passive was the way to go. And
yeah,
so, as I talk to people, as I talk to engage with clients, doing this 20 years, and it's not a perfect science, but what typically happens as you get to the end of where this kind of quad 2, where everything's easy, everything goes up, everyone's an expert again. So,
Yeah.
as we get those kind of soft signals as well, that we're starting to turn where it's going
Yeah.
to get harder. And so
Yeah.
I don't have a problem with getting into an environment where I think it's going to get harder.
Yeah.
So if I'm early, I'm early, but when I kind of make decisions, I think about it from the perspective of what's the likelihood of this playing out. If I was 3 months ago at kind of a coin toss, I wouldn't have done anything. I'd wait.
Yeah.
As
Yeah.
that number gets closer to what I'd say is somewhere around 80% likelihood that we get into quad 3 and 4, which I believe we are now,
Hmm.
then have much more comfort and conviction. If I'm a little bit early, then I still have some flexibility to move and take advantage of that. But
Hmm.
having lived through enough quad 4 environments, which is slowing growth, we could wake up one day or one month, the market's down 10 or 15%, and
Yeah.
you know, most people won't have done anything.
Yeah.
Yeah.
Well, that's the thing. That's a good point, and I think that's something to point out as well. Like, how many advisors think and trade like this? You know what I mean? I mean,
Mhm.
this isn't really in the norm. So, like,
Right.
uh, people listening to this, they're just like, oh, this is good info. But what they should probably know, it's not really that common for advisors to take this approach, right?
No, no. No, I mean not with the to the extent that we would, and particularly even from this perspective, is we buy puts within the portfolio to kind of know that maybe we still want to own some stocks because we think there's potential to own good stocks here, but how do we do that and
Hmm.
protect ourselves? And so from adjusting the mix, and we get visibility on what other advisors are doing within the firm as well. And I get
Hmm.
visibility by talking to other advisors. There's not many that would do it this way because it's a lot
Right.
of work.
Yeah. Well, I think that you nailed it there, and I think it's important. And we have mentioned this before, but like, why, you know, how is it different than the typical advisor strategy, right? Which is like
Mhm.
more of that passive approach.
Yeah, so we look, I mean, the one thing that we've done and I get is I see the top 10 holdings at all the brokerage firms. I know
Yeah.
what the brokerage firms hold as their top 10 holdings within their advisor's book of business, and I get to see what's in there, and I know what's in there, and it wouldn't be a
Hmm.
surprise to anybody what's in there. And so
Hmm.
as a result of that, you're going to get participation in the markets. So,
Hmm.
on Monday when the market was down 3%, you know, your portfolio was probably down 3%. So 3% on $1 million
Hmm.
portfolio is $30,000. So,
Hmm.
when I look at what a balanced portfolio looked like for us on that day, can't say the specific number, but it was less than 1%.
Yeah.
So, yeah, yeah.
Yeah.
So,
Yeah, and the reason why I asked that question isn't really to plug the way that we do things. It's more of to get inside, kind of pull the curtain back on what the because most of our clients don't know the difference, right?
no,
They've come to us, we've kind of explained how we do things, and most of the time we get the clients from other advisors who they're just like nothing ever happens, right? So
right.
it's more of just to have a look behind the curtain, what the thinking is, and what
Mm.
have a look a little bit on what some of the strategies are in the industry. So anyway, shifting gears, I'm we haven't talked about crypto much lately. And we've had a couple of people call us out on it. Oh, you guys wouldn't shut up about crypto, and it's doing so well. And the last couple, few months, it hasn't done well, and we've barely heard boo about it, right? Well, yeah, we're talking about other things that are exciting. And crypto's not exciting right now, so there's that. So
Yeah, I mean,
I have to
it's
cut that part out.
Yeah, but investing is one of the few places where when things go on sale, people run away from them. And so,
Yeah.
like when you're investing in any asset class, volatile asset class, when things go down, you should say, okay, maybe it's worth considering to add to. I mean, there again, this kind of talks about more strategy too, right? Where some people will play that momentum strategy. Let's keep adding to the position as it goes up. I do think still, if I like a company and it goes down for whatever reason, um, then I should buy more of it. I mean,
Hmm.
from my perspective, it's a simple decision. So, you know, crypto would probably fall into that category. I still think that
Yeah.
there's tons of potential there. And, as I put out in the daily reports that I send out to clients, put out an interesting slide recently talking about where Ethereum is in the evolution and really talking about how many addresses, or not, I guess they're not called addresses, but how many wallets that are out there, and really talking about kind of that Metcalfe's law, that network effect. And it's
Hmm.
really shifting people's mentality to think about it as a technology. And so as a
Yeah.
leading technology, it's amazing, unique, and extremely different.
Yeah. And I think it's still, even though it's been not as loud in our world, right? It's still gaining momentum. Like, for example,
Sure.
my wife was listening to a podcast with Ashton Kutcher and Mila Kunis, and for like an hour, that's all they talked about, right? So it's gaining more of that mainstream, and that's what we need. That's what you need,
Yes.
right? Is you need that
Yeah.
kind of mainstream adoption. Yeah, sure. She won't believe me when I tell her crypto, the benefits of crypto, but she'll sure believe these few people she doesn't know and aren't even in the industry. Makes sense because they're famous, right?
That's right.
They're celebrities. They must know,
Yeah.
right? But that's exactly, like, I mean, I'm all for that. That's great that
Mhm.
more people are talking about it and it's being adopted. And I think it's just kind of settling in. People are starting to wrap their heads around it. More businesses are starting to open up around it, right?
Yep.
Like, as we get going here, I think the foundation is being set. And like you said, it's kind of weathered the storm, right?
Mhm.
What's that you said? It's kind of been through the gauntlet here and came out the other side and
Yep.
somewhat unscathed. I mean, yeah, the stock price dropped, but
Yeah.
the asset is certainly still strong.
Yeah, I mean, definitely unscathed from the perspective that the leverage washed out of the system in 48 hours. I know we talked about this, but when you typically have a stock market sell-off, it takes months, weeks, months, potentially years, to recover the structure of it. When we had the washout and all the leverage came out of crypto, it was 48 hours and nothing
Hmm.
broke. The price went down, but nothing
Hmm.
broke. Yeah,
Yeah, that's
yeah,
amazing.
yeah,
So, what do you think the future is there? To just wrap up, like the next wrap up on crypto.
yeah.
So, when do you think do you think it's gonna get back on a rope? Do you think it's gonna be kind of like a gradual increase? Do you think it's gonna be flat for the next 6 months? What's your feeling on it? Obviously, you don't know for sure, but what's your overall feeling on it right now?
Yeah, so that's there's two answers to that. One, because of we talked about macro at the start,
Right.
and when you talk about macro, you do back tests and you look at the data, right? So if
Yeah.
you look at the data setup, crypto tends to have a difficult time in quad four.
Mm.
So when you look at it from that perspective, you say, well, I think that there's potentially equity like risk to it right now. Um, but a big part of a drawdown's already happened there. So, I think that it's something I worry about from an economic perspective. I think if we were to
Hmm.
look past that kind of 6 month window, I think that you continue to see massive adoption, and I do think it's the technology that's most interesting. And as we look at Bitcoin versus Ethereum, because a lot of people still kind of look at comparing these two, Ethereum's getting a ton of attention right now, and a lot of developers are using that as their platform. And so, I think that I mean, I still think that there's tremendous, like multiple X of upside with these things over a period of time.
Hmm. One thing I should ask about the quads, and maybe you mentioned it, was the how long do we typically stay in a quad, right?
Mm, yeah. Yeah, so that's a good question. I mean, it's not there's no one rhyme or reason why and how long we stay in that. Presently,
Hmm.
the data says 6 months,
Hmm.
this one. Um,
Yeah.
but what
The one
happens,
we're in, or the quad four that we're coming up to?
the quad four that we're coming up to.
Gotcha.
Yeah. So that's the economic numbers. From a market perspective, I think you tend to get a little bit like we're seeing some of it now, like some of the signals, right?
Hmm.
Small caps are still down kind of 7, 8%, and they haven't recovered the trend lines. We mentioned commodities. A lot of their trend lines have been broken. These are signals that we've already entered the next phase from a market perspective. The economy hasn't
Hmm.
quite got there yet. The
Hmm.
U.S. 10-year peaked at 176 in March. Now we're kind of in the 130-ish range. So these are all signs that these are signals that the market is entering it now. But the
Hmm.
data looking forward says kind of 6 months of quad three and four. And
Hmm.
so, what I'd look at and say, what does best in those two setups? And you look at, and I'm pointing over here because you look at the different sectors that do well, and you go, okay, where I got an overlap. Okay, well, long bonds do well in both setups. Okay, the US
Hmm.
dollar does well in both setups. Gold does well in both setups. So if you're not sure where we're going to be, you'd look at the things that do well in both. But
Hmm.
presently, right now, to answer your question though, is that this present one looks like 6 months.
Right. If somebody wants to take a deep dive into the quads, where should they look for it? Like Hedgeye, just go on the Hedgeye website. I'll have all the info about that. Is that what it is?
So they have the info on there. Yeah, they have a 30-day free trial too, where you can see some of their data, some of their inputs.
Hmm.
Yeah, I would say that that's probably a good place. Darius Dale set up his own company as well, and so he's doing some research on it. Um,
You have to pick sides, Ben. You have to pick sides. Can't have both.
yeah, yeah.
Yeah.
So I mean, and it depends how deep you want to go, but Hedgeye has an insane amount of information if you want to learn about it. But
Hmm.
really, what it comes down to, as I say, it's growth and inflation. Those are the two things
Right.
that you need to think
I,
about.
I have a third option. If people want to know, they can email you
Yes,
directly, ben.hart@nbc.ca. Little plug. I've
yes,
been plugging you like crazy here today. I don't know what it
yeah,
is. I feel good. I feel good about
yeah.
what you're doing, Ben. What can I say?
That's
Eh,
awesome.
I'm
That's
excited.
awesome.
I'm excited
Yeah,
about the Hart Investment Group
yeah,
today.
yeah.
I had one other question. Oh yeah, about the quads. Man, I'm jumping around today. Must be the late night. But so even looking further ahead, does it typically just go in order like that? Like go quad four and then back into quad one? Is that what happens?
Mm.
Yeah.
So that's what it doesn't always do that because last year we went kind of straight from quad four to quad two. But Hedgeye's data, if we look it out, I mean, they forecast out about a year, so you can look at that. And so presently, right now, it looks like we would go to a quad one sometime early next year. Um, and I mean, these things definitely ebb and flow and cycle, and so you have to kind of adapt as they go. But nothing's a straight line. A lot of things can change the inputs, and so it's hard
Hmm.
to look out that far from a positioning perspective. If you want to be positioned for what's coming like really soon, you kind of got to look closer and then adapt as you go.
Gotcha.
Yeah.
Okay. Well, did you want to say anything else about the quads or the crypto before we get into the final segment?
I think the last thing on the crypto is there's still so much happening in this space, and as we dig into it, and as I look at the space in more detail, you get this attention towards NFTs, towards gaming, and you're getting all of this technology merging. And I think that the general media and the market is still missing that there's a potential convergence of all this technology that's really interesting. And so while we talk about crypto, it's the technology that could really change things. And that's where I'd say, you have kind of this Raoul Paul from Real Vision talks about this exponential age. And so
Mm-hmm.
that's where I think that there's huge risk reward potential. And so with my spare kind of thinking as I look at things, that's where I spend a lot of time trying to investigate how to be best positioned for that, things that he says, has 10 to 100x upside. In,
Yep.
In the broad market, I don't think there's anything that has
Yep.
that kind of upside.
Yeah. That's probably a good way to summarize it too. Like if you want to deep dive into more of what we're talking about and more of really our overall views, right? We could point people, which we've done in the past, Real Vision, Raoul Paul, Keith McCullough, and Hedgeye, Darius Dale. What's his thing called now? Is it just
Macro
him?
42, Macro 42.
Mac. Oh, it's so trendy. Macro 42.
Jesse
That's the
Jackson.
new one.
Yeah, Jackie Robinson.
Anybody else?
That's it.
Oh, okay. I see.
Yeah. Yeah.
Yeah, like those three in itself. I mean, there's so much you could go down a rabbit hole for years on all that stuff, right? But it's
Yeah.
the general same view that we have, so we're pretty much in alignment with most of their views as well. So
Mhm.
we love our content, don't we, Ben? Hey,
We
throw the
do. I mean, I
podcasts
think
on.
this is, yeah, you got to listen to it. I mean, I think that's one of the things too, where we try to uh, think about what's coming ahead, and not just sit in the box and do whatever kind of the main traditional finance does. You got to look and think and investigate and realize that this world is changing. We're kind of we're in a really massive transition, I believe, as the baby boomers, kind of the last of the baby boomers are retiring. You got kind of that average age out at 68 now. And so as
Mm,
they start to leave this kind of work environment, and you get the younger group coming in, and you're getting a pretty material change to the not only the market environment but the economic environment. And so I think
right.
it's one of the most unique times that I've ever seen. If you read history, when you get these big changes, you get a massive technology change.
Yeah, absolutely.
Yeah.
Yeah,
Yeah.
you can't deny that's coming, or is here really. All right, there's no better way to end this great episode. I think we're 19, episode 19, to talk about Jeff Bezos's rocket that he went to space in. I don't know if anybody else, we're giggling like a bunch of 12-year-old boys here because I don't know if you saw what's it called even? Is it called the Amazon rocket?
Blue Origin.
But the Blue Origin was at full mast, let me tell you, and it made it to space with Jeff Bezos on it. And if you're wondering why we're giggling, just Google the Blue Origin rocket, and it has this very distinct shape to it. And but you know what? Good for him. He made it, man.
He
He
did.
blasted off all the
Yeah,
way to space in
he
that
did.
thing.
He did.
Yeah,
Yeah,
second billionaire to reach it, I
that's
guess.
right.
Right?
That's it.
Richard Branson did it last couple weeks ago.
He did. But
Yeah.
Bezos, I mean, was chipping at him, as you probably saw. His view is that you're not in space until you pass the Kármán line, which is 100 kilometers from Earth. And Branson never passed that. So
Oh,
Bezos said that
okay.
I went a little bit further, actually went into space where you didn't. So,
Okay. I got it. I got it. So I
so
guess that just leaves Elon, right?
yes.
Elon's having a rough time getting in there. I'm sure that just irritates him to no end, right? Like that
I
he's
bet.
third now. He's got to go
I
even
bet.
further though. No, he's
Yeah.
got to. I don't know what the next line is in space, but he's got to
Yeah.
circle the moon or something. Hey,
He just
he's
might
gonna
try.
take. He's take his Dogecoin right to the moon. Literally.
That's right.
Anyway, terrible joke. Okay. Anything else you want to add to this lovely episode 19?
No, I think that's great. I think we
Perfect.
summed it up perfectly. I think that there's
Summed it up.
great opportunities ahead, but I think the biggest thing I think is that what worked in the first half, not going to work in the second half. Changing and positioning puts you in a position to make money through the next phase of this market.
Yep, absolutely. All right. Well, that's it for episode 19. Think at Heart. I'm Scott Goodfellas and Ben Hart. Again, if you want to get a hold of us, as always, you can just Google us or you can go directly to the website. Websites are still a thing. I don't think very much longer, but heartinvestmentgroup.ca. Just search us up on any of the social medias. Heart Investment Group. We're on all the platforms. Or Scott Goodfellow, you can find me there. Or Ben Hart, you can find him somewhere as well. You know how internet works. I don't have to tell you. Okay, that's again. Nice to see you. See you next week. Bye.
Bye.